As the evening unfolded, events in Washington took a turn that senior U.S. officials had long anticipated, that Russia's inner circle had publicly brushed aside, and that global financial markets had quietly braced for. It was not a development shaped by months of grand speeches or years of slow committee deliberations. Instead, it came together in a matter of hours that sharply tightened the financial vice around Moscow and redefined America's posture toward the war in Ukraine. What occurred today in the United States Senate was neither symbolic nor rhetorical, and it certainly was not routine. A sanctions bill backed by Donald Trump and aimed squarely at Russia advanced decisively through the Senate, carrying with it measures intended to strike at the core mechanisms of Russia's war economy rather than merely generating political headlines. That distinction matters profoundly. Sanctions are not driven by moral outrage alone. They function through arithmetic and systems. They work by restricting access to capital, raising the cost of insurance, interrupting payment channels, and forcing third-party nations and corporations to make uncomfortable choices between participation in the U.S.-led financial system and continued engagement with Vladimir Putin's war effort. The line crossed today was not defined by Russia's conduct abroad. That threshold had been passed long ago. What made this moment different was something more structural and political. After months in which American resolve appeared fractured and uncertain, particularly from Moscow's vantage point, the political alignment in Washington suddenly crystallized. Russian strategists had assumed that U.S. domestic divisions would slow or dilute further action, providing space to maneuver and time to wait out Western pressure. That assumption unraveled today. The Senate's response was coordinated, deliberate, and designed to be difficult to undo. This legislation did not inch forward quietly. It gained momentum following intense briefings and private negotiations, with lawmakers increasingly convinced that Russia's current position is not one of strength, but of strain. Senators described an economy under pressure, a military consuming resources at an unsustainable pace, and a financial system growing more vulnerable by the month. Beneath the Kremlin's confident rhetoric lies a reality Russia would prefer not to advertise. Wars are not sustained by speeches or symbolism, but by cash flow. The sanctions now moving through the Senate are aimed precisely at that lifeline. They focus on energy exports, maritime insurance, shipping registries, banking intermediaries, and the secondary actors, countries, firms, and financial conduits that have helped keep Russia's economy functioning while its military expends equipment and manpower at extraordinary rates. These are not peripheral targets. They are the arteries through which Russia's war effort continues to breathe. What has surprised even seasoned observers is that this push is not happening in opposition to Donald Trump's position, but with his backing. That endorsement alters the political calculus in Washington and abroad. For Republicans, it breaks lingering resistance. For allies and adversaries alike, it signals that U.S. pressure on Russia is not dependent on the occupant of the White House. Sanctions that carry bipartisan support and insulation from future political shifts cease to be temporary instruments. They become strategic fixtures. That is why officials are treating this moment with such gravity. When sanctions are perceived as durable and bipartisan, they stop functioning as short-term leverage and start operating as long-term architecture. Architecture reshapes behavior gradually but relentlessly. And when improvisation gives way to strategy, Moscow pays attention. Tonight, Russia's official reaction has been conspicuously muted. There have been no dramatic denunciations, no immediate threats, no rhetorical escalation. That silence is telling. When the Kremlin chooses restraint over bluster, it usually indicates internal calculations are underway. Damage is being assessed, scenarios modeled, vulnerabilities examined. And by all indications, the numbers are not encouraging. This is not the conclusion of the story, but it is a moment when the balance on the board shifted. From here forward, every Russian move will be made under tighter constraints and narrower margins for error. For months, subtle indicators, far from press conferences or official statements, have suggested that Russia's economic position was growing more fragile. Not collapsing outright, but tightening. Energy revenues have fluctuated unpredictably. Insurance costs have risen quietly. Shipping routes have grown longer, riskier, and more expensive. Analysts in the U.S. and Europe have observed an increasingly complex and opaque system through which Russia continues to sell oil and gas, often at steep discounts and through intermediaries designed to obscure the trail. That system depends on a delicate balance. Third-party countries must continue buying. Banks must keep processing transactions. Insurers must remain willing to underwrite shipments. Disrupt one element and the system strains. Disrupt two and it begins to buckle. Disrupt all three and sustaining a large-scale war becomes extraordinarily difficult. What raised alarms in Washington this winter was not a dramatic Russian advance or escalation on the battlefield, but rather the absence of one. Military operations slowed in certain sectors. Logistics movements became quieter. Financial indicators flattened. Those who study sanctioned economies recognize the pattern. Reserve buffers no longer growing. Emergency fiscal tools reused. Currency controls tightened quietly. Transparency decreasing rather than improving. These are signals of mounting pressure. For regimes like Putin's, such pressure creates an acute dilemma. Escalate abroad to project strength, or stabilize domestically to prevent unrest. Attempting to do both is costly, and Russia has been trying. That balancing act consumes resources rapidly. This is why sanctions, particularly secondary sanctions, are often more feared in Moscow than weapons shipments. Weapons harm soldiers, sanctions undermine systems. They force decisions that cannot be easily obscured by propaganda. The Senate's move reflects an understanding of that dynamic. For years, Russia believed U.S. sanctions policy was politically vulnerable, subject to election cycles and partisan disputes. That belief shaped a strategy of delay and endurance. Wait out the pressure. Outlast Western unity. The legislation now advancing directly challenges that assumption. The bill is structured not only to punish Russia, but to lock in pressure over time. Sanctions are codified in a way that makes them difficult to reverse quietly. Any relief would have to be public, conditional, and verifiable. The language has been crafted carefully to limit the executive branch's ability to waive or suspend measures without congressional approval. This alone alters the timeline Russia had been counting on. Equally significant is the bill's expanded scope. It does not stop at Russian entities. It targets those who enable Russia's economic survival: shipping firms, financial intermediaries, energy brokers operating in legal gray zones. In doing so, it widens the battlefield from Ukraine's front lines to corporate boardrooms around the world. And boardrooms are deeply averse to uncertainty. European diplomats have described this as a reset in containment strategy, not louder or faster, but structurally stronger. Sanctions that endure across administrations become a form of infrastructure. Over time, infrastructure shapes behavior, incentives, and risk tolerance. Earlier today, Senate leadership confirmed what had been building quietly for weeks. The Trump-backed Russia sanctions bill cleared a key procedural hurdle, bringing it closer to a full vote. On its own, that would be noteworthy, but it is the substance of the bill that transformed concern into urgency. Briefings to lawmakers outlined three major expansions. First, the definition of sanctionable activity is broadened dramatically. The focus moves beyond Russian state banks and defense firms to include facilitators, insurers, shipping registries, energy traders, and financial conduits essential to Russia's export capacity. These measures turn routine commerce into high-risk activity. Second, the bill strengthens secondary sanctions. Non-Russian entities, including companies in Asia, the Middle East, and Europe, could face U.S. penalties if they are found supporting Russia's energy or financial lifelines. This is the lever that forces even neutral actors to reconsider their positions, because access to the U.S. dollar system underpins global trade. Third, the bill embeds sanctions into statutory law, constraining the executive branch's flexibility. Sanctions relief becomes something Russia must earn through demonstrable change, not something quietly negotiated or temporarily suspended. The political implications are equally striking. Trump's backing proved pivotal in consolidating Republican support, dismantling Moscow's long-held assumption that a Trump-aligned Washington would ease pressure. Instead, the message is that this effort transcends individual administrations. It is framed as a national security imperative. Privately, senators describe the support as stronger than expected. Not unanimous, but decisive. Enough to move forward, enough to matter, and enough to be noticed. Within hours, analysts tracking Russian exposure noted early signs of unease: increased hedging, rising risk premiums, closer scrutiny of assets linked to Russia. These are not dramatic shifts, but they are often precursors. Sanctions rarely strike all at once. They tighten gradually, then abruptly. Tonight marks the beginning of that tightening phase. The Kremlin's response remains measured. Official statements are carefully worded, dismissive on the surface but cautious underneath. This combination often signals internal debate, which in authoritarian systems rarely reflects confidence. The absence of loud retaliation is itself revealing. U.S. officials emphasize that the real power of the bill lies not in any single restriction, but in cumulative pressure. Energy revenues constrained by insurance costs rather than outright bans. Shipping slowed by risk calculations rather than prohibitions. Financial flows disrupted by compliance decisions rather than political announcements. This is pressure that erodes functionality over time, and it comes at a particularly difficult moment for Russia. Military spending remains elevated. Domestic subsidies are expanding. Maintaining social stability is becoming more expensive. Allies quietly welcome the move, seeing it as predictable, durable, and coordinated. It reassures them that U.S. resolve will persist beyond electoral cycles. There are risks, of course. Retaliation is possible. Cyber operations, energy market manipulation, deeper alignment with alternative blocs. But U.S. officials argue that the greater danger lies in allowing Russia to believe that time favors endurance. This bill is designed to challenge that belief. Inside the United States, the advancement of this legislation complicates narratives of division. It suggests a shared understanding that Russia's war is not merely a regional conflict, but a test of whether economic power can still enforce international norms. What comes next will take time. Debate, amendments, and votes remain ahead. But the direction is unmistakable. Pressure is increasing. Options are narrowing. The assumption that Washington will eventually blink is becoming harder to sustain. Russia has learned before, often too late, that wars do not end solely on battlefields. They end when the systems that sustain them can no longer function. Tonight, those systems are under genuine strain. The story continues, but its trajectory has shifted, and every move from here on will be watched closely.